wonder if you're concerned about how the Federal Reserve operated through the recent liquidity crunch in markets. We talked to many traders who said the tax date payment was known well in advance. There were several reports from people pointing to September as a potential crunch time. You closed Monday at the top end of the Fed funds rate. Tuesday came along and there wasn't an operation until 9 o'clock and no announcement of a second operation till 4 o'clock in the afternoon. Was the Fed listening to markets well ahead of time, going back a year when there were blowouts in the overnight rate at year end and the turn of the year? Are you concerned about how, for example, the New York Fed operated through this?
So I would say I doubt that anyone is closer to and has more invested in carefully following the behavior of these markets. So of course we were well aware of the tax payments and also of the settlement of the large bond purchases, and we were very much waiting for that. But we didn't expect that the response to that was stronger than we expected. And by the way, our sense is that it surprised market participants a lot too. People were writing about this and publishing stories about it weeks ago. It wasn't a surprise, but it was a stronger response certainly than we expected. So no, I'm not concerned about that. To answer your question, I can go on a little bit about how we're looking at that. Why don't I do that? So, as I mentioned, we don't see this as having any implications for the broader economy or for the economic outlook, nor for our ability to control rates. The strains in the money markets reflect forces that we saw coming, and they just had a bigger effect than I think most folks anticipated. Strong demand for cash to purchase treasuries and pay corporate taxes. We took appropriate actions to address those pressures, to keep the Fed funds rate within the target range, and those measures were successful. If we experience another episode of pressures in money markets, we have the tools to address those pressures. We will not hesitate to use them. And since we're talking about this, let me take a step back and say this. Earlier in the year, as you will all recall, after careful study over a period of years, actually, the committee announced the decision to implement monetary policy in an ample reserves regime. And we've been operating in that regime for a full decade. We think it works well to implement our rate decisions. The main hallmark of that regime is that we use adjustments in our administered rates, the IOER and RRP rates, to keep the Fed fund rates in the target range. It's designed specifically so that we do not expect to be conducting frequent open market operations for that purpose. So going forward, we're going to be very closely monitoring market developments and assessing their implications for the appropriate level of reserves. And we're going to be assessing, the question of when it will be appropriate to resume the organic growth of our balance sheet. And I'm sure we'll be revisiting that question during this intermeeting period and certainly at our next meeting.
Just follow up very quickly. Do you think you've underestimated the amount of reserves necessary for the banking system?
So we've always said that that the level is uncertain, right? And that's something we've tried to be very clear about. And as you know, we've invested lots of time talking to many of the large holders of reserves to assess what they say is their demand for reserves. We tried to assess what that is. We've tried to combine all of it together. We put it out so the public can react to it. But yes, there's real uncertainty, and it is certainly possible that we will need to resume the organic growth of the balance sheet earlier than we thought. That's always been a possibility, and it certainly is now. Again, we'll be looking at this carefully in coming days and taking it up at the next meeting.